This is our Forex blog video for October 31st, 2012. I'm going to scroll this back so we can see the midnight to 12 o'clock. Those are pretty much from 3 to 11 or 12 is when most people trade. This is our new currency meter, which makes it a lot simpler to find the strongest currencies to buy and the weakest ones to sell. This uses every single time frame in this weighting. The old one just showed the real-time trend, and underneath that I showed the 15, hourly, daily, weekly, monthly, and a lot of traders found it too confusing. So I actually personally prefer this new method as well. It just makes it super easy to know which currencies to buy and sell. You can see I only give the monthly trend 4% weight, 13% weight to the weekly, and 18% to the daily. 2/3 of this reading is very fast, real-time tools that measure both the direction and the intensity. The range ADX is 20%. I use range bars, which are made of tick data, and this uses 2-minute bars and 5-minute bars to know the intensity. How far is each 2-minute bar moving compared to the past? 20-day average for that time of the day. Same thing with the 5-minute. So 16% of this weighting plus 20, well over a third, is for intensity of real-time momentum. And so anytime this is at or above the 80 level, it means the vast majority of the time frames are down and they have intensity to the downside. You can see from 3 o'clock onward you want to sell the yen, and one of the stronger ones was the euro. So let's bring that up. You want to look for buys in the euro yen. Okay, so here's 3 o'clock, and you can see there's lots of resistance above here. We got the previous day's value area high, which is beautiful because it's actually about 10 pips underneath the previous day's high. The value area is where most traders had their positions yesterday, and the upper one is this light green area with the gray above and below it, and here's the lower one. It basically means that 68% of yesterday's trading activity is inside this range. And breakouts of that typically will continue, and a lot of times get you into a breakout before it breaks out over the previous day's high. Now the level above it is a very significant one. It is the average trading price of the previous week. And typically it's going to be resistance, but once it breaks above there, typically stops get hit and you're going to have a lot of continuation. So even though 3 o'clock told us to buy, personally I would wait for it to get above this point of control of the previous week. If this was not here, you'd want to get in it. And if you want to take a chance and risk 6 to 10 pips, this is a 5 pips per bar chart, get into that breakout right here, put your stop underneath there, and you can see our trailing stop kept you all the way in there up until 70. You would have got in here around 33 and made about 45 pips on that trade. Now once it gets above the upper band, you really want to wait for a little bit of a pullback. You can see our buy signal right here got you in. It went up about 20 pips. This one right here got you in. This one here had a loss. This one had a small win. This one had a 20 pip win. And if you notice, coming up to 12, more than likely there's a little bit of strength coming back into the yen. And notice the euro that was strong is no longer that strong. So really from 9 o'clock onward, you're going to be very hesitant to get into trades. You're much better off drawing your fibs from the low to the high and waiting for at least a 38% pullback, which is why this trade here is such a good one. And then it pulled back to the 50% level. That's not a bad trade too. You can see it went up about 15 pips. But the farther up it goes, the more you're going to want to wait for a deep pullback before you get into the trade. Now the Swiss is also very strong, and it tends to mimic the euro. It's pegged to the euro. I don't leave the Swiss yen running, but I'll bring it up here just so you can see. And this one's off to the races too. It just continues up. Again, the farther up it goes, you're going to wait for a pullback trade, kind of like that, or this one right here. And again, draw your fibs on the whole wave and wait for a 38 to 50% retracement. Sometimes it stops at 38%. When it starts to go back up, you get in. This one came almost to the pip, to the 50% level. You can pretty much make a living trading, just waiting for big moves and then waiting for a 50% pullback. Usually it won't go below the 50. If it does, it finds support here and then it bounces. A lot of times I'll get into a trade, if it comes down here and finds support, I'll add to my position, and if it goes back up and gets above the 50, I'll hold on. If it stalls here, I'll get out of the trade, with a small profit. But you can see 3 o'clock onward, it just took off and it went up about 60 pips. And if you miss that first one, you got to move here, you got to move here, you got about 20 pips here, you got about 10 pips here. And notice how it acts as the 62% as well, goes up. Now the pound was also strong, so let's bring up the pound yen. We want to buy the strong pound versus a weak yen. Okay, so basically from 3 o'clock onward, this is the value area high of the previous day. And unlike the euro yen, once it gets above there, the previous day's high is way up here at 46. Notice that's over 25 pips away. This is a much higher probability trade because the real key to trading is having small losses and bigger wins. You didn't know with the euro yen trade if it was going to go above the previous day's high when it breaks the upper value area the previous day. And so a lot of times if you buy right here, it's only going to go up 10 pips and then it's going to come down and stop you at break even or with a small loss. Let's go back to the pound yen. But with this one, the next area of resistance is all the way up here. So you have a very high odds, probably 70% or higher, of making at least 25 pips while risking less than 10. And that's really the nuts and bolts of trading. Now above the upper white band, typically you're going to get a reversal. So if you see a buy signal up there, just watch it. If you want to take a stab at it, that's fine. But what I typically do if I do take a trade like this is trade much smaller lots. When it goes 1 pip above that bar's high, you get in. Your stop is right underneath there. When it goes up a bar like this, move your stop in half or right underneath that bar's low. And that way if it comes back down and stops you out, which probably over half the time it does, you're only going to lose 2 or 3 pips. And if it goes up and hits the next resistance area, the previous month's high up here, you're going to get out of the whole trade because it's very risky above the white 2.0 band. You can see this trade right here worked. This one is above the 1.5 red band but not the upper band. Again, if you move your stop up, you're going to lose less. In this case, break even. You get into this trade right here and you made 20 pips. So you have a bunch of small losses. The first one was a 25 pip or so win. And again, when it goes up and it keeps making higher highs, draw your fibs and wait for a 38% pullback. You might, a lot of times it doesn't hit the 38%, so you might get into a trade, lose 7 pips, get back in again, and you can see this one up 25 pips right here very quickly. And that's trading for you. You're going to have losses, you're going to have wins. Make sure you have bigger wins than losses. And I didn't draw that fibs on there properly. Let's draw it up to here. And when you draw it on there, you can see it was a 95 pip move. Any swing of 50 pips or more, typically a 38 to 50% level, is going to be a good retracement level. Anything over 50 pips, the 38% is really high probability. If it's 50 pips or less, a lot of times it will retrace to the 50 or 62% before it goes up. Now, if you don't want to use the currency meter, you just want to get into trades, let me just show the euro dollar. A lot of people trade that. You can just use our buy and sell signals, which are based on artificial intelligence and a lot of, there's about 36 different chart patterns it looks for, plus our statistical tools to find these trades. Okay, so as you can see, when this goes from below to above the point of control of the previous day, it's not a bad trade. I don't put that on the charts here because there's a lot of failures. If and there's a lot of variables that really only a human can see. You can see that the trend is up, pulls back, it's kind of going sideways here for a while. So when it breaks out, it's likely to make another wave up. This sell signal right here is basically because of the previous day's high and the upper value area. Anytime you have a reversal right at that area, it's a sell. But you want to overrule that when you see extreme strength and when it doesn't go a pip below that bar's low. It's actually not a bad buy when it breaks out right here. You want to draw your fibs off that previous swing to know where your Fibonacci profit target is. And these are good places to get out with a small profit in this case. Notice how we find the 3 swing highs because they're above the upper containment bands and because this is really a high probability place for the market to stall. The weekly value area high when it's at or above the 2.0 containment bands tends to be where price will reverse. And so because of that, we put these sell signals here. If this band was a little bit lower, not at an extreme like this, then we have a lot more strict criteria before we give sell signals. So one of the reasons why our tools are fairly accurate, pretty highly, percentage-wise winning, is because they do use statistics on where the support resistance areas are. And if you get a buy and sell support or resistance area outside of a normal volatility range, then it's even more likely to be the end of the move. And notice, the high here, here, and here. So you take a trade here, you make money, buy here, it goes up, buy here, it goes up, sell here, it goes down a little bit, sell here, it goes down, buy here, it goes up a little bit. In the light gray ones are low probability counter trend signals, but you can see this one here stalled the price. You can use it to exit a trend trade, and sometimes if you believe that the trend's going to go down because the momentum is clearly to the downside, this sell signal here got you into a 15 pip drop and another 20 pip drop, 15 or 20 pips right there.